Hello and welcome to the Crypto Beat, where we discuss what's happening right now in the crypto space. My name is Tim Copeland, and I'm the editor-in-chief of The Block, crypto native news site. Joining me today, we have Arthur Hayes, CIO of Maelstrom. Welcome to the show. How are we doing?
Thanks for having me, Tim. I'm doing excellent.
Awesome. Now, before we get started, I'd like to mention The Block is hosting a crypto conference this year with some of crypto's biggest names. We have 120 speakers. The agenda's now live. You head to emergence.xyz and use the code TheCryptoBeat, all one word, all lowercase, for 20% off. Now, today's episode is focused around the US election, the markets, and other topics. But I wanted to ask first, you've been doing a lot of traveling recently. How does life now compare to back when you were running BitMEX?
Back when I was running BitMEX, I had 250 employees that I had to deal with. Deal with is probably the strong word. They were delightful people, but it's not really something that I actually enjoy doing, which is managing a large team. And so you're on calls, putting out sort of personality issues between your senior management, doing a lot of HR stuff, which is, in my view, not very fun, not what I like to do. I'm a trader. I like reading about macro and writing about it. And so that's my life then. Now I travel around, I read a lot of books, I surf, I play tennis, I go skiing, it's great. I like this style of pace a lot more. Maelstrom's about, I think, 5 investment professionals. So it's a much more manageable team. And I like that sort of dynamic a lot more.
Awesome. And I saw somewhere you mentioned you like being a writer, you see yourself very much as a writer. Have you always been a writer since you were younger?
No, I actually hated writing back in high school. So it's quite interesting that a lot of the value of what Maelstrom provides is the written word between myself and the research analysts that we have on staff. So life is very ironic.
Interesting. All right. And now, so it's a big day. The US election is today, or at least starts today. Who do you think is going to win?
Coin toss. Flip a coin. I don't know. Depending on the which team the most people in the chat are in, you hear positive things about Trump. You hear positive things about Harris. People have positive statistics about how early voting is going for Harris. People have positive statistics about how early voting is going for Trump. Who fucking knows? I have no idea.
Okay. How much faith do you place on Polymarket for calling the result?
Polymarket is predictions, not probability. And so I think a lot of people get that wrong. And so when they see, I don't know what Trump is right now, 50, 60%, whatever it is, it must mean he's going to win. That's not what it means. It means that if you ran the election 100,000 times or 100 times, 60 times, Trump would win. 40 times Harris would win. It doesn't tell you the probability. It's like if you have a fair coin that's 50-50 and you flip it 100 times and you don't get 50 heads and 50 tails, that doesn't mean the probability is not 50-50. It just means you haven't run enough experiments. So we only have this existence right here to run the Harris-Trump election test or hypothesis, if you will. And so if we had infinite number of parallel universes and we could sample the result, it should approach probably 50-50 at this point.
So you think we need to have more US elections?
Well, I think that's what the cable news networks think. They're loving it.
Yeah, it keeps them in business. And I was curious, if Trump wins, how does that change your investing strategy sort of over the next few years?
0. Whether Trump or Harris wins doesn't change my outlook at all. The problems and the solutions that are politically feasible in the United States are structural. It doesn't matter whether Team Red or Team Blue wins or whether Team Red or Team Blue is in control of the House of Representatives or the Senate. There's only one particular way that they can do these things, and it means printing money. Because at the end of the day, all the people who represent the American public are all of a certain mindset that they want to protect rich people's assets and they don't want a revolution, and therefore they're not going to, conduct an Argentinian-style austerity and sort of extinguish the rotten amount of credit in the system. They'll just try to outgrow it via, various means of having high inflation, high nominal growth, and financial repression. Similar to what China and the rest of North Asia has done to essentially become export powerhouses over the last sort of 80 years.
Okay, and you've talked a lot about quantitative easing in both the US and China. How like integral is that to your sort of thesis of sort of crypto adoption going ahead, or at least maybe that's more related to the prices than adoption. But like, how much of that is
I
that?
think they're both. I think they go hand in hand, because inflation and debasement, alongside that, you have to have financial repression and coercion, which is what governments do. And so, the more you inflate, the more you have to try to restrict the ability of the people to freely express themselves on the type of money that they want to hold. And so, obviously, the fiat price of the thing goes up, which gets people to want to own it, and the fact that people's savings is being debased consistently around the world, no matter which country that you reside in, that also is a wake-up call. Hey, I want something else. I want something that's going to preserve the value of energy that I produce through my labor. And so I want to own Bitcoin. So I think it's part and parcel of both. It is central to my thesis on why I'm so bullish on cryptocurrencies. If for some reason the major economies of the world decided they wanted to do austerity and possibly have a revolution on their hands, then, when we come out of that sort of period, then you could see fiat currencies a little bit more, I guess, desirable from a normal person's standpoint. But again, I still think Bitcoin does well in the first few innings of that situation, and then it's time to get out of sort of speculative positions in crypto, and maybe you want to diversify into fiat assets and government bonds if governments are prepared to pay you the rate of growth, if not more, of the economy.
Okay, and what's the end game of that scenario? The idea where, US, China print a lot of money, you have much higher inflation. I assume this is sort of predicated on the idea that you sort of can't go backwards. Like, it's not like the US can sort of slowly pay off its debt and eventually come down to like zero debt. Where do you end up in a situation where you end up just continuously having to print more and more and more? Because you have seen in other countries where you get hyperinflation, things like that. Do you see these big economies going that way, or do you see it just like there is inflation, but it's sort of manageable, but then sort of crypto goes up, but it doesn't like replace currencies?
So I would look back more into what happened in World War II, if you want to take a similar sort of situation where the U.S. is. And so what did they do to fund the war? They printed a lot of money. The Fed and the Treasury combined. They did yield curve control where they fixed the price of bonds out to 10 plus years at, I think, 2.5%. They restricted the rate of deposits that a bank could pay. So banks could only pay a certain level. And then using that financial repression, they also banned the private ownership of gold and devalued the dollar by 40% over the few weeks after that. And so, devaluation, inflation, financial repression, all those together allowed, obviously, debt to GDP to rise during the war, but to come down very quickly afterwards. Because if you are growing in a nominal, real growth plus inflation type situation faster than you're accumulating debt, then you deleverage your balance sheet. And that's the end goal. So debt to GDP in the US at the federal government level was like 130% by the end of the World War II. And then by sort of the 60s, it was down to, 40%. Actually, 70 something percent. So they deleveraged 60% over a few decades using very standard sort of financial repression. And so I don't think the end game is hyperinflation in the US, mostly because the US has enough energy and food to be self-sufficient at a particular price. And so I just think there's going to be persistent inflation, and that persistent inflation will be tolerated by the monetary and political authorities, because if they're able to have growth, nominal growth, faster than inflation, then they're going to deleverage their balance sheets and, at least at the federal government level, be in a much healthier fiscal position. And so I think that's what they have to do.
Okay, and following the election, sort of like how do you see the next 3 months playing out?
Well, I mean, the question is, will the other side accept the result? We'll find out how quick and easy this particular election process will be. Will there be some sort of like civil war in the U.S., some big left tail scenario where a bunch of people want to secede from the union and there's a big fight? Maybe. I don't think so. But I think we're probably in a no trade zone between now and when the next president is sworn in, because one scenario that I've been thinking about, and I can't really handicap the probability of this happening, is let's say that Trump is elected, Harris actually concedes, the Democrats go their merry way and they don't kick up a fuss. What does the Fed and the Treasury do about monetary policy between now and January 20th? I believe there'll be either 2 to 3 Fed meetings between then. There's already some issues in the overnight repo markets and how the Treasury market functions that requires the Fed to end quantitative easing, quantitative tightening, meaning to stop shrinking their balance sheet to help the Treasury fund these massive deficits. But you have essentially an openly antagonistic Treasury Department and certain Fed governors who basically say, we want to make sure, and this is in the past, let's make sure that monetary policy is accommodative so that Kamala Harris has a strong economy going into the election that precludes Donald Trump from being elected. That should be our goal as public servants of the Fed and the Treasury. And you've seen bad girl Yellen do, stump for Harris. You've had certain Fed governors come out and be openly against Trump. And so would these people help the Trump transition period by providing the financial and monetary easing necessary to keep the Treasury markets well functioning between now and when his new staff comes into play? Or would they say, actually, we're not going to do anything, and we're just going to let the chips fall as they may, not our problem anymore? Could we have some sort of financial crisis between then and now because, the bureaucracy of the government is openly antagonistic to Trump, versus if Harris is elected, they all want Harris to win. And so they'll continue providing the stimulus to make sure that it looks like the U.S. economy is running strong, the Treasury can fund the federal government's programs. And so I see this as, a possible issue, even if Trump wins and, people think that that's really good for crypto and certain other risk assets. And then the Fed and the Treasury threw a monkey wrench in the process by basically sitting on their hands and letting the inexorable, financial crisis that's right under the surface of the U.S. markets happen because they don't want to help Trump.
How problematic would that be?
We could see it's the Treasury market looked like it was going to have a lot of issues at 5%. 10-year yields in 2023 last year, 4.5% on the 10 years when QT was tapered back earlier this year. So 4.5 to 5% in the Treasury yield, something goes wrong in the U.S. financial system. And there's easy fixes for all this stuff that, the right amount of liquidity and changes in the regulations will fix these things, but it requires the Treasury and the Fed to do them. If they decide that actually that's not my problem anymore, over to you, Trump, 21st of January onwards, then we could see some people blow up. And that might be negative for risk assets like Bitcoin. It might be positive, I don't know. I think it's just, it's a unknown unknown, a known unknown.
Mm. And do you think the Gensler's gone either way?
Yes.
And what's your view on Trump's DeFi project? Do you think it has any legs?
I haven't really done much deep digging into it. The little bit of that I heard, I was on a panel with Tarun and Hasib back at Token 2049, sounded less complete and utter piece of dog shit. So I don't know. Haven't really done much research. That's my only data point. Could be wrong. Don't care. Not going to trade it. Not going to buy any of it.
Okay. And it's been, I think, 3 months since the big worries over the Japan carry trade. That was very scary for 1 day or 2 days. We had a 1-day bear market. And it sort of dropped out of the public conversation since. What's your opinion on how relevant or big this still is as an issue and how it, could still potentially impact the traditional crypto markets?
It's absolutely still a massive issue. Nothing was really solved. The only people who got carried out, sort of in the TradFi sense, were some new pod shops, like Millennium style pod shops, who basically grossed up in the summer right before, using the yen carry trade to gross up their risk positions, and then got margin called as the yen went from 162 to 142 or whatever it was. But the reason why the mini crisis ended after 2 days is because the deputy of the BOJ, the Bank of Japan, came out, I think on the Tuesday afterwards, saying, "Oh, hold on, guys. We were that rate hike thing. We're going to slow it down. If we think the market is not going to take it well, what they say, market volatility is their euphemism for that, then we're not going to hike rates." And ever since, we've had essentially, I don't know the name of the new prime minister of the Liberal Democratic Party, LDP in Japan. He came into power. He's a little bit more of a hawk in terms of wanting the BOJ to normalize, but then the LDP lost a majority in the recent parliamentary elections, and so it's a question on the new coalition: are they going to pressure the BOJ to speed up or slow down the rate hiking? I think structurally, at the end of the day, the yen is going to go to 100 or somewhere near that. You've heard Trump and sort of his assumed U.S. Treasury pick Bassett talk about how the dollar needs to weaken, the yen needs to strengthen. Trump's been very vocal about that. I think that Harris and Biden, or no, Harris, whoever, I don't know, Tim Walz, is that her VP pick? If they're in office, again, they're pursuing weak dollar policies as well. Yen is going to structurally strengthen. And so the question is, will the Fed, using central bank swap lines, provide liquidity to relevant sectors of the Japanese financial system so they don't have to sell treasuries as they unwind these positions and repatriate capital back home and allow the yen to appreciate? So it's still there. The question is whether the Fed is going to be proactive and provide liquidity in advance to make sure that Japanese pension funds and corporates and the BOJ itself, when they need to unload those treasuries, no, don't unload them. Here, I'll swap them for dollars. You take those dollars and buy those yen that you need to buy. Let's just keep everything the same. We don't actually want to unwind these positions, and we'll finance them for you. So I think it's still there. We'll see if it percolates up to a mini crisis. But if I had to guess, whoever's in charge of the Fed when this does come about, or the Treasury, will provide the financial easing necessary to make sure that there is no crisis. Because I think that the Fed and the Treasury are in a let's not fuck around and find out mode. They're not gonna let a Lehman happen. It's, oh, we had some banks kind of fail in March of 2023. Blanket guarantee of all banks. That was the Bank Term Funding Program. As soon as there's any sort of whiff of financial crisis, they are guaranteeing deposits of banks. You know, every single bank that's failed since was it Silvergate, the uninsured depositors have been made whole, even if the equity holders were wiped out of the bank. So they've essentially guaranteed the, I don't know, umpteen trillion of dollars that are uninsured, this blanket deposit insurance. So they don't want sort of real capitalism in America. They want American capitalism with Chinese characteristics, as I like to say.
Okay, so do you think this is something that will sort of slowly unwind over time? Do you think this is something that could have maybe like a bit of a dampening effect on like prices over time? Or do you think this is something that has the potential to, be like a big collapse for a period of time if it sort of falls apart quickly?
I think if anything's going to happen, maybe we'll get, I don't know, something will happen, some unexpected move by some central bank, BOJ or the Fed, sends yen down, and then the Fed steps in and puts the swap lines under it, unlimited swap lines, and then the issue goes away. Doesn't matter. And then the Japan Inc. can unwind their positions by getting financing from the Fed, and that just adds more firepower to fiat debasement.
Okay, so you're saying like it's a very real big issue, but you're not worried about its impact on the market.
No, yeah, exactly. Because I think the Fed and the Treasury know about the issue. They know Japan structurally has to sell these treasuries and repatriate the yen. The presidents either want a weak dollar and a strong yen to improve the export position of American industry. And so therefore, if they don't want treasuries being sold en masse, they need to finance them. And they will do that. And they've proven that any sort of wobble in the financial markets, when it impacts the ability for the treasury market to function properly, they will provide unlimited fiat liquidity to make sure that problem goes away.
Okay. How do you think the Bitcoin ETFs have fared over the year?
I mean, I think it's a great product for people who want to earn fiat trading Bitcoin. Good inflows. You've had some relative value hedge funds like Millennium and folks trading these, doing a basis trade. Obviously, the Wall Street Inc. Salesforce is starting to get educated about these, and they're starting to go out and sell them. You have Larry Fink on TV talking about Bitcoin's great, you should own some, please buy my product kind of thing. So while I think that you should always self-custody your Bitcoin, that's obviously not for everyone. And so if you have to do something, at least, get some fiat Bitcoin, as I like to call it. It's not real Bitcoin. It's sort of a liability of the TradFi banking system, but it's better than being in just dollars or yen or yuan or whatever.
When you were back at BitMEX, did you anticipate that Bitcoin ETFs would happen?
At some point they were bound to happen. I didn't really have a date in mind. Obviously, the Winklevoss twins have been trying to do this for 10 years, and, they weren't the right kind of white guy to get it done, needed to be more crusty and old. And so Larry Fink got it done. But at the end of the day, that just goes to show about who is supposed to own Bitcoin in sort of the TradFi capital markets from a Western perspective.
Yeah, VanEck still seem upset that, they were like, we're first. And they're like, nope, everyone together.
Yeah.
Yeah. All right. Do you think there'll be a Solana or XRP ETF anytime soon?
There'll be an ETF and as many cryptos as a sponsoring banker and asset management fund wants to launch. If there's appetite, they'll launch them. I think the first few will be a bit slow and painful, obviously, like Bitcoin and Ethereum. But TradFi makes so much money from passive investing. BlackRock, I don't know how many billions of dollars it makes every year. It's a very profitable business. And all they do is they just create a new ticker, they store it for you, and it's a great product for a lot of investors. And Wall Street earns fees from it. So I think they're going to continue with these. There'll be an ETF and everything. Just like there's an ETF in any sort of strategy you can imagine, and sort of the traditional stock, bond, foreign exchange, commodity market.
Okay, and what's your end of cycle Solana price target? This is a question from Twitter, if you can't guess.
End of cycle Solana price target, I don't know. $1,000? I don't know. I have no idea.
All right. Cool. And on to Memecoins. In October, you wrote the only meme coin you own is the Church of Smoking Chicken Fish. Why did you pick that token, and is it still the case?
So I thought it was funny. It's a funny image. I liked the pseudo-religious banter and, basting and cod, and the imagery was funny. The people were funny, very engaged community. Oh, okay, I could see this thing, going above 100 million market cap and continuing. Obviously went above 100 and went back down. That's the game. We'll see how it does. I own another meme coin, which is GOAT, the AI meme coin by Truth Terminal. Those are the two meme coins that I have in my portfolio right now.
Do you think Truth Terminal is an actual AI agent or some dude just writing out the tweets?
Doesn't matter. Enough people think that it's an AI, and that's all that matters. And it started sort of this trend of AI LLMs acting as independent agents doing crypto stuff, right? And so that's the meta narrative. And this is the first meme coin that is on that narrative, and therefore everything else will be a derivative of GOAT. And so I'd rather own GOAT because it's already over 500 million market cap. It's more likely to stay and go higher versus another token that might actually be the real deal. Maybe it is, maybe GOAT is completely fugazi, and these other ones have real AI LLMs behind them, but that doesn't matter. GOAT's the first. Everyone talks about GOAT first, and then, let me find the super cheap one, nominal terms, still a fallacy, that I can buy, and maybe it's going to go from 10 million market cap to 500.
Cool. And how's your NFT project going?
Airheads is going great. We just had a call with the oil team today. The mint is going to be, I think, within the next few weeks. And we have some interesting things planned for a possible meme coin airdrop to users. And there's some interesting things they've been able to do with the UTXO model and inscriptions and Bitcoin DeFi. So stay tuned. It's going to be quite an interesting and informative project. And what is possible on the Bitcoin network when we want to bring culture and the tech together.
And how much potential do you see in crypto AI tokens? Like, do you think this is like just a fun fad with like Truth Terminal for a bit, or is this going to be like an interesting meta for at least a few months?
I think it'll last for a while. Just however many, there's so many, anyone can spin up their own LLM. And now if you can set them loose on social media and give them a crypto wallet and they can do what they do, it's going to be an explosion of different themes around this. So what are they going to do with this? Maybe it's an investment portfolio. I don't know. Who knows, right? That's the whole point. We don't know.
And where do you see the most potential among meme coins right now?
I mean, probably just the AI creator ones, but again, I'm probably the worst leading indicator on a meme coin being successful. I don't hear about it until it's like $100 to $500 million market cap because I'm not really in the weeds on that. And I don't know if you looked at the statistics from Pump.Fun on like how many meme coins trade above 100 million and stay there, it's like a handful. So, I'm late to the game, which is fine because that's my strategy. I'm gambling here. It's a little bit of money. I don't really care if I lose it all. But if I'm going to gamble, I want to at least gamble somewhat intelligently.
So you're not just sitting there like every day on Pump.Fun, just, like let's try and get this next big one.
No, I need to hear about it. It needs to like come up through, the people that I'm listening to, seeing on Twitter, in chats with. Of course, as everyone knows, I don't really spend that much time looking at screens. So if it somehow gets to my consciousness, it's probably already hundreds of millions of dollars of market cap. But that's exactly what I want, because if I'm earlier than the next wave of people who hear about it because, Matt Levine writes about it and money stuff on Bloomberg, that's when you get a big surge in price in a better risk-adjusted fashion than, trying to be in all the discords, trying to find the $10 million token that goes to 100, right? I mean, you can do it. It's hard, but it's really, really hard to consistently hit winners on doing that.
Yeah. Let's say if your like net worth got reduced to zero and maybe you weren't like as prominent as you are now, what would be your strategy for like making it at this point in the sort of crypto landscape?
So I guess the first thing is you have to, how much money do you want to make? Right. So is it, okay, I want to, whatever the activity is you want to do or the thing you want to buy, like you have to have that goal, a realistic goal. And then, do I have enough capital where I can do passive yield earning strategies to get that? If yes, great, do that. Trading is fucking hard. Don't do that. If no, I don't know, what would I do? I'd probably go get a trade school degree and become an electrical engineer and then trade crypto on the side, right? As long as you have a real job or a skill, like if you get fired, you're going to find another job, then you can trade crypto. You can be fucking batshit crazy because you're not worried that you don't have this income coming in. But like, if you think you're going to be like, I don't know, a finance bro or dudette at some sort of bank and you get fired and then, because AI took half the jobs, there's no more seats at the banks, then you have no skills and you want to trade crypto on the side, I'd say that's riskier than being a plumber and trading crypto.
Do you think AI is going to affect trading jobs?
Yes, I do. I think that sort of, if I think about my time, and obviously this is a long time ago, like 10 years ago when I used to work in TradFi, a lot of my job was mindless bookings, right? It's, hey, the bank has employed high paid people and much lower paid people. And we have these, bookings that need to get done. We didn't invest in technology. So we have all these different systems all over the place. We have all these different rules on settling stock and foreign exchange, and we can't fuck it up. So we're going to have the lower paid people do it first and then pass it up the chain. And then by the time it gets to the trader, because it's your ass on the line, then you're going to check it too and redo everything. And that was my job. I was a glorified booking monkey. And that can all be done with AI and computers, right? A lot of the client flow is literally just like, okay, read this chat here, ask that person over there for the price. That can all be done via a computer. You could have a straight through processing flow of client order to execution on even most derivatives with no human input, because the client has the idea, they know what they want to do. And maybe you have one high touch salesperson who goes out to dinner once in a while with said client. You don't need me or a lot of the traders involved in this stuff.
Okay. It's sort of like back to meme coins a little bit. Are you surprised that Suzu is going to conferences? Like I was at, I believe, Rave in Paris like a few months ago, and he just like walks past. And I'm like, oh, that looks like Suzu. You surprised he's sort of still like going around being very active in the crypto space and like doing everything with like OX.fan?
I mean, people are still, I guess, supposedly giving him money. I don't know why. And if they are, then I guess roll the dice again, right? If someone's stupid enough to hand those guys money again, then they deserve to lose all their money.
All right. Cool. Now, a big topic that's come up recently is listing fees. Coinbase says it doesn't charge any listing fees. We've had some people sort of say, well, it charges other fees. And you know, it sort of seems like everything's a bit connected together. Like, does that sound right to you that they charge listing fees, or do you think they don't?
So I don't know specifically for Coinbase because I don't know any of Maelstrom's portfolio companies that have done a primary listing. When I say primary, I mean the first listing that you have done for your token is on Coinbase. So I can't speak to whether or not that's true or false. All my projects are like, I need to be on Binance, right? And that was the genesis for this, for my research. I didn't do the research. The analyst at Maelstrom did the research. And I get this chart from one of them, and it's like, okay, well, we have all these projects, like literally every fucking call I get on, like they bring me in, okay, you know, Maelstrom, we've invested a check, we're doing advisor. What's the first thing they ask? Oh, we need to have a Binance listing. Can you help out? Like, do you really need a Binance listing? When we look at the data, not to say that nothing's wrong with what Binance is doing. They're doing exactly what they should be doing, maximizing their profit. But listing on Binance is not getting you like a 5x pump in your token price. And there's two reasons for it. Number one, you price it too expensive. So if every project is $1 to $10 billion FDV, it's really hard to grow into that valuation with the metrics that most of these projects have, which is zero. And then on the second part is it's really expensive. Because people are willing to pay it, they're going to charge it. And so you're talking about projects giving 5, 10, 15% of their token supply, millions of dollars in marketing spend at the exchange, you know, forced buying of the exchange token, handouts to KOLs of the exchange. And I'm like, okay, I could see paying that money if every single project that was listed on SX was 5x up from when it listed. But when shit's down 95% and the median was like 50% down, what are you paying for? Lower the price of your thing, go to a DEX or go to a second or third tier exchange that charges much less. There's no reason why you need to be on Binance unless the data said, okay, then the Binance price pumps. So that was the whole point about that. They obviously look at it holistically, right? The new issue market, just like in traditional TradFi, all the money's made in IPOs on sort of like a sell side investment bank. It's so much money for the exchange, for the lawyers, for the banks. Everybody loves IPOs. The retail loves IPOs because they pop, right? So it's this whole industry. And so we recreated that in crypto with sort of the new issue market because ICOs kind of went out of favor. Now everyone needs to go through this centralized pipe. And because the centralized exchanges are gatekeepers to their clients, they're going to charge you a hefty toll for it. And it makes complete sense. And so I think if any exchange says they don't charge listing fees, they probably are, in the narrow sense, technically correct, maybe. But holistically, they have many different facets of their business that are lost leaders that they say, okay, well, I want you to custody, or I want you to use this wallet, or you need to give this distribution channel first dibs, or my investment team needs to get in at a 75% discount and no unlock period. So there's all these different ways that they can extract value from a project that's not a listing fee. So then these heads of the exchange can go on Twitter and sort of like obfuscate what's actually going on.
If you're launching a token like today, what would be your strategy in terms of like tokenomics? And then also like, I mean, you sort of touched on this a bit, but the launch strategy, maybe focusing on community or exchanges.
Yeah, I mean, go early, right? I say the earlier, the better. Raise a little bit of money from, the pre-seed, seed stage, the few $1,000,000 you need to get sort of to a product, and then launch it immediately, right? Because why is ETH, Solana, I dare say Cardano is a piece of dog shit, but they have a great community. They're engaged. Why? Because they all got rich. Why they get rich? Because they were able to get the token early. Why are they able to get the token early? Because back in the day, projects basically either did an ICO or they did sort of a really early launch of of the token and get it out there, right? So we need to go back to that, which is, hey, I've got a community. The whole point of this is use my product and you can get wealthy with alongside me, versus what we have today, which is I'm just going to raise all this money I don't need from these Western VCs, and then I'm going to launch this thing at this massively high valuation. Nobody can make any money, and then I give an airdrop and everyone dumps it. I mean, of course. And then all of a sudden, everyone complains that my chain's dead. There's no sort of activity because you gave 15% to fucking this exchange. You didn't give it to your users, and now you don't have any currency to get them to do what you want. The token is one of the best engagement mechanisms ever. So you get the user, hey, I want you to do these 5 clicks, and every click I give you 5 tokens or whatever it is, right? And so the more tokens you have in your back pocket to incentivize the usage, to get people on your app, to get people talking about it, because now they have a financial incentive to talk about your application, to tell their friends, oh, this is your problem, why don't you use this? And I own the token too, and you can get some too if you want to, if you do whatever they want you to do. So I think go early. If the listing fees are too high on a centralized exchange, use a DEX. That we have the other option that you don't have to use a centralized exchange, and sort of stop worrying about your token price. It's almost irrelevant what your token price is in the beginning, because if you don't actually get any users and get them to engage with the product and get them to talk about your product, then yes, you can have a 5 billion stranded FTV project on some major exchange. You as a founder can't sell anyways for usually like 4 to 6 years. So what have you actually done? You've done fuck all. And then all of a sudden, the thing just bleeds to zero. And then all of a sudden the exchange is calling you, the trading volume is insufficient. We need to delist your token. And so you've just fucked yourself. And now you have no more tokens because they're all sitting in the exchange owner's pocket and they already dumped them because you gave them no lockup period.
Talking of raising a little bit of money, are you active on Echo? Like, have you considered creating an Echo group?
I am that active on Echo.
Do you think it's good for the sort of crypto VC market?
Can you give me an explanation what Echo is?
It's Kobe's sort of platform where, let's say if I create a group and I get a deal, I can give that deal to everyone in my group, and it's sort of all on the same terms, and then the platform gets a fee. It sort of sets up a JV. So it's somewhat between sort of crypto angel investing, maybe a bit of KOL stuff, but it sort of basically allows early access to seed rounds to people who aren't big VCs.
Right. I guess, maybe. Or if projects just wanted to launch, do priced rounds, if they put a, 2-sided pool up on Uniswap or something and raise money that way, whatever, right? Or did an auction, did a reserve price on a DEX, accomplishes the same thing. I can't really say whether it's good or bad. I think it's just another mechanism.
Have you ever thought about launching your own token?
No, not because then you're actually beholden to the community for the thing to go up in price, and I don't want to moderate what I say or what I do because I think that people are going to buy or sell my token.
Cool. And then one thing that I've wondered about quite a bit recently is that everything right now sort of seems to be focused on meme coins because a lot of people are too scared to, I think, build things with the sort of the SEC going after anyone who sort of builds anything functional, useful, valuable. I think that personally, I think there's been a bit of a drive towards meme coins because of the really challenging regulatory environment. Do you think after the election we might see a move towards less fear in that regard and people being able to really focus back on projects with fundamentals as opposed to meme coins? I'm
not trying to be insulting, but I think that entire line of reasoning is bullshit. If you're building a decentralized financial services product for the entire world and you're worried about 4% of the population, then go work for a bank. If you're worried that there's no fundamentals in meme coins, there's absolutely fundamentals in meme coins. It's called attention. That's what we're selling here. Why was it worth 0 in 2009, and why is it worth 1.2 to 1.3 trillion in fiat terms now? Attention, right? We're trading attention. Meme coins are the purest form of attention because there's no other extraneous things that they're supposed to do. Is this funny? Is it cool? Is it viral? are more people going to put their eyeballs on that screen and look at that meme coin or not? It's the purest form of what crypto is attention, what any asset class is in reality, right? If you know about it, then you can make a decision whether to buy or to sell it. But if you don't know about it, then you're making no decision. And so I think that people who dismiss meme coins as fundamentally unsound don't understand the game that they're really playing, which is an attention game, and getting people to see your product. I mean, whether they like it or not, at least they saw it. And so that's what meme coins encapsulate. And so I think they're a great thing for the industry because they're bringing so many other people into crypto who otherwise would never even touch this stuff because they like the funny picture. Now they feel like they make some money on it. They understand how to use a MetaMask or a Phantom wallet or whatever wallet they want to use. They're getting into the scene. They know what Solana is. I mean, maybe you're an ETH bull. I'm a big ETH holder. I don't care that everyone's coming in through Solana. At least you're here. And now you know, oh, what's Solana? Oh, what's Ethereum? What's the difference? Oh, what's Bitcoin? Or what are all these different things? And I'm going to learn about all these things. And I got in here because, you know, of some funny dog with a hat on its head. Great. I mean, that's progress.
You have a lot of stuffed animals. I know you've talked about this before. Bearing in mind how quickly anything can become a meme, what's the name of your favorite one?
My favorite stuffed animal is Omar the octopus. I think someone else already created an octopus meme coin.
Yeah, it doesn't surprise me. Cool. And then I have a random question from a friend of mine. How is your meaningful stake in a robotic sextile startup going?
It's going well. I mean, they're building robots, right? It's hard. The hardware is difficult, especially hardware you're supposed to fuck, right? And so, I mean, it's going well. We'll see how they do. Robotics is difficult. Everyone's trying to get into this field. I think they have a meaningful differentiator in that they're actually focusing on adult companionship, which, as we know, powers the world, right? Porn empowers the internet. Pornhub is one of the most impressive technology companies around, given the amount of traffic that they serve and, you know, all the concurrent video views and all that. But it's for porn, but whatever. And also they make a lot of fucking money.
All right. Well, on that note, I'm out of questions. And that's all I have for today. I want to thank Arthur for joining. Make sure to follow on Twitter, Twitch, and Spotify. Subscribe on YouTube. Remember, we have a 20% discount for Emergence using the code TheCryptoBeat. And make sure to read the blog to stay informed on everything crypto. Thank you, and see you next time.
Bye, y'all. Thank you.